As 2022 closes down, I've been reflecting over the last few years making sports card content. What got us here in the first place? Let's talk about it. Hello to all my sports card collectors, investors, all of my collectibles friends. Another day, it is another card video. We are back again. I hope that everyone's having a great holiday season so far. If you're new here, you're looking for just about daily sports card collectible style content. Exactly. Guys, you have come to the right place. Please help support us. Stick around for a while. Hit that big red button down below, the subscribe button, so that you are notified each time a new video comes out, which is on the regular. Also connect with me on IG at Sports Card Dad, and I'm also on Twitter, the Sports Card Dad. Big shout out to today's video sponsor, ComC.com, your home for buying, selling, and flipping all the hottest trading cards. Their consignment marketplace is home to over 30 million cards, from baseball superstars like Aaron Judge to Marvel favorites like Spider-Man. ComC has something for every type of collector. Make sure to visit ComC.com today to build out your collection with your favorite cards. Guys, it's like Disneyland for card collectors. Check them out. All right, so here we are. We are rounding out 2022, and it's been really interesting. If we look at kind of U.S. monetary policy over the last, 3-4 years, really you could argue this is going back 15 years after the subprime mortgage crisis debacle, and then what the Federal Reserve did to try to correct that. And what that eventually meant was historically low interest rates, federal fund rate historically low over an extended period of time. And so what happens when you couple that with stimulus over the last couple of years? Man, it's been just like a hotbed for an explosion in pricing for all different types of assets, whether we're talking about sports cards or comic books or coins or crypto, stocks, whatever it is. Pricing has moved up on just about everything, including the necessities, food, shelter, etc., which of course causes the inflation problem. And what has the government and the Federal Reserve done to correct this correction, the overcorrection on the other side? They have raised the federal fund rate faster than they have done in decades, 40 plus years. It's been a wild swing. And the one thing that I learned, it's like, what can we learn from this? The one thing that I did learn, and I heard a lot of this. So over the last couple of years, you heard that, Bitcoin is going to be the new currency. The US dollar is going to be just dried out and it's not going to be worth anything. And it kind of was headed in that direction. But the Federal Reserve caught wind of this, and man, they swiftly corrected or swiftly acted on this. There was talk, I remember at the end of last year, of the Federal Reserve was going to raise rates something like 10 times or 12 times. I remember seeing a Goldman Sachs report on it, but I don't think that anybody really believed it. It's kind of one of those things where it's like, but do they have the guts? And they proved that they do have the guts, and they've just absolutely switched this thing. They've turned this thing on its head. We do talk a lot about just demand for cards, and a lot of it is, I joke about my midlife crisis. I'm 41, getting back in 2018 into collectibles, a lot of the childhood stuff that I love. And yes, there is a lot of that. There's a lot of kind of that nostalgia and people my age that got back in for that reason. But monetary policy drove a lot of this. All the discretionary income, a lot of that discretionary money, that extra money, it came down trillions of dollars of stimulus. There's been talk lately about PPP loans. Many companies across the country took advantage of PPP loans, and individuals got stimulus as well. Certain individuals, many individuals got stimulus along the way, and that money had to go somewhere. And so some of it, of course, was for people that they had job loss. They had, all sorts of different things that they needed to pay for, and that was a help. But this was blanket stimulus. So even if you didn't lose your job, even if you weren't necessarily affected, a lot of people were still getting stimulus. Now, some people would say like, hey, this is part of the deal. It should have happened. I remember when this was happening, going back a couple of years, a lot of people were touting this as, this is the lower to middle class is getting a huge boost. Basically this is catching them up. This stimulus is helping them to level up, to head off kind of discrepancies in pay and different things like that. But what do we always see with stimulus? This isn't the first time this has happened. But this latest example of stimulus has been the largest probably in U.S. history. I don't think that we've dumped this much money into the economy as we have done. And this was on top of the fact that we had historically low interest rates going back 15 years. And so now what do we see? Now we've got kind of this correction that needed to happen, and the Federal Reserve has come back hard. They have not been playing, and they probably will continue to do what they're going to do for the next few months anyway. There's speculation that, once we get into February, March, April, May, that they slow down on this sort of thing, but we'll see. I mean, I don't know. Jerome Powell hasn't really said a whole lot guaranteeing that. He has kind of hinted at the fact that they probably won't be doing 3/4, 0.75 basis points on the increase, but it doesn't seem like they're going to just completely stop. They will continue on. So we will see what happens here. And obviously, this stuff can change on a dime. Market sentiment, whether we're talking about equities, whether we're talking about real estate, whether we're talking about collectibles, a lot of it is going to depend on what is happening at the Federal Reserve and U.S. monetary policy. And I didn't realize how much it affected things until the last 3 years. The last 3 years really showed each extreme. And again, it's not that all of this money was the only reason why there was demand in the card market. There was also organic demand that happened, people getting back, and there's still people getting back, and there's still 40-year-olds like me that are rediscovering their old childhood hobbies and loving it. So this is not just based on that, but if you look at what's happening, though, you've seen a big increase in pricing for sports cards going back a couple years, and then you've seen that money just siphoned out over the last 18 months and probably more in 2023, right? Because now cash is king. Cash is king again, and now people are moving out of this stuff. They can put money into CDs. They can put money into a savings account and actually get a pretty decent yield for a change. It's just bonkers, and this hasn't been the case going on for 13, 14, 15 years. And what is most interesting about this is it's not as if the sports card market as a whole, there's a lack of interest and companies have been falling apart and this and that. There's actually been more investment in companies and more investment into projects related to sports cards. And so this is going to be really interesting, though, because a lot of the money that was pumped in, a lot of the investment money that was pumped in over the last couple of years where just money was flowing, now that is drying up. It's going to continue to dry up, I think. I think that a lot of the venture capital type stuff, I think it starts to become a little bit harder to raise money. And what happens then? Then certain companies are going to have to sink or swim. Companies are going to have to figure it out. And that's going to be an interesting, thing that we'll have to look at in 2023. I had a prediction video a couple of days ago. Now 2023 is really going to be like, all right, can you profit? Is it going to happen? Can you maintain? Can you continue to build? Can you survive? You've heard a lot of, I mentioned Rudy Alpha Investments, just stay solvent in 2023. Just stay solvent. We're not necessarily in big growth mode. It's just stay solvent. So we'll just have to see with a lot of these industry companies, will new ones pop up as well? This is all going to be fun stuff to cover. But I just thought, I was just kind of reflecting on monetary policy in the U.S. and the impact it's had on this hobby, along with many other markets. And now is going to be either the time to shine, or I think it's going to be that we see companies fold. So guys, let me know your thoughts in the comments. Have you had similar thoughts on this? Anything you want to expound on? I'd be happy to hear about it in the comments. As always, stay healthy, stay awesome, and I will talk to you again later.